Well, hello and welcome to Trading Blows. In this week's episode, we will discuss last week's surprise rate hike from the ECB. We'll also digest this week's central bank bonanza, including decisions from the Fed, the BoE, the BoJ, and much else besides. And we'll also dig into the FX market and assess whether the dollar can continue its winning streak, which is in a 9th straight week now. Without further ado, let's get into the show. So, plenty for us to discuss on the show this week. It only took 3 takes to do the intro, and of course, all of us on the panel this week praying and keeping our fingers crossed that no one decides to pull the fire alarm. Joining me on the show this week, Richard Matthews, the head of FX and payments at One.io. Made their name in crypto trading and now spreading its wings. Richard is, of course, the holder of a record number of wooden spoons, has a fancy new hoodie that he's wearing, and living proof that it is possible to teach an old dog new tricks. It's also possible to teach me to read the script he gave me. Joining Dick on the show this week, Adam Linton, head of the European desk over at Newsquawk, a provider of real-time audio updates of market-moving news, and Adam's got an incredibly busy Thursday ahead of him with all those central bank decisions. And last but by no means least, Arno Venter joining us from down in South Africa. As always, the panel will score points for a great response to the questions. The better the response, the more points they will score. And of course, the threat of points being chalked off looms over them, either if a dispute is raised over their answer or if anyone turns up wearing a hoodie. Without further ado, let's get into the first round. Right. I want to look back before we look forward. First of all, it's worth me mentioning, actually, we're filming this Wednesday afternoon, about 1:30. You will watch this after the Fed meeting. So just bear that in mind in terms of the context of some of the answers. Also giving everyone a handy get out of jail free card if their predictions age poorly. Adam, I want to start with you looking back at last week's ECB meeting. I mean, how much of a surprise was it that they actually went forward with a 25 basis point rate hike, given how dour the news seems to be on the economy at the minute?
I just don't think it was that much of a surprise at all, and I think I was relatively consistent in saying that. I always thought
that ruins my question, doesn't it?
The September meeting was a little bit underpriced. I mean, as you mentioned, yeah, the growth outlook didn't look great. The PMI data was pretty soft, and then basically every number that we've seen from Germany has been pretty much a disappointment. But at the end of the day, I mean, central banks are paid to control inflation and manage inflation expectations. And if you kind of think of the backdrop that we had coming into the meeting, yes, we had soft growth, but core inflation was still running at a clip of 5.3%. And then if you take a metric like the five-year inflation forwards, which many people use as like their key proxy for inflation expectations, that was at 2.6%, which was a 13-year high. So, even though inflation was expected to fall and it's expected to be on a downward trajectory, they couldn't really declare victory at that stage, I didn't think. And we know that they've been putting less weight on their projections anyway, and they've been in data dependency mode. So I thought I thought they were always going to hike. I thought, like we've seen with the Fed where they engineered a skip, I don't think the ECB, that was ever really an option for them. I think the politics on the governing council were just been a little bit too difficult. I think whenever they hit pause, I think that's them done. I think they'll struggle to kind of come back to the table really and kind of engineer another hike. So I think the policy trade they've made is they're sacrificing some growth for trying to keep inflation expectations anchored. And I think, the messaging from the last hike and what that says to the market, I think carries more weight than any potential incremental damage that we get to growth. But then, going from 3.75% to 4% for growth, how much of a material, change is that really going to make anyway? So, without, bigging them up too much, I think they managed it carefully. And I think that is them done. I think from here on in, any marginal tightening they want, that'll be done via the balance sheet. I think PEP is potentially the one to watch if they are to hike. But yeah, I think they're done for now.
Yeah, I think that's certainly become the consensus, hasn't it? And if you look at market pricing, that is overwhelmingly what's being priced in at the moment, that was indeed the last hike. I mean, the bar seems to be a very high one for them to go again. Mr. Matthews, welcome back to the show. What were your thoughts on the ECB? I mean, is this the right trade-off to be making, favouring inflation over growth, or is this, Trichet Mark II?
too. Nice to be back. It actually wasn't a surprise to me either, as you may know, as I did predict 25, 25, 25, which might well be wrong now.
That's very true. I should probably own up to getting that one wrong when we spoke.
I think you're the only one who didn't predict it, aren't you?
I think I was, actually, yes. So hands up, I got that one horribly wrong.
Always upset the interviewer. I've got to agree with that. I think that this probably is the last hike. I think they had to do it. I think there's still inflation signs there. And we'll touch on this later on, I'm sure. Oil looks very, very strong to me. And despite today's figures in the UK, it must influence inflation. Germany, I don't know, it's just an absolute basket case. I can't see that they can get around to hiking anymore from here. They picked a fight with China over electric vehicles, which is always a wise thing to do when China is one of your biggest export markets. I think they've boxed themselves in. I don't know. I didn't hear what Schnabel or Lane said today, but I presume that they spoke hawkish and will try and keep the market up there. But I think that they're done. I think one of the first trading days we did, you asked who's going to be the first central bank to cut. I think way back when, I said at the time, I think it'd be the ECB. Everyone laughed. I still think it will be the ECB. I think they'll be forced into it, but it's just a factor of the way the euro is constructed. There's so many different pulls and pushes in that mechanism that they really is a very, very weak currency, which we'll touch on later on, but I just can't see how you can buy the euro at the moment.
Yeah, as you say, we'll get on to the euro and the dynamics there in a second. Dick, I just want to stick with you. Your prediction has seemingly aged quite well. Do you think it's going to be inflation, or do you think it's going to be growth that's going to drive the ECB to cut?
I know what you're trying to get me to say. I'm trying to get me to talk about trampoline inflation. Which we're starting to see, actually. I think in Canada, they're starting to see signs of it coming back. I am very old, and I always view Europe from an inflation standpoint. And I always think the Italians just love a bit of inflation because they always have. Spain's the same. I think inflation isn't dead there. I think oil, as I just said, will push inflation higher. But Germany, it's like the Bismarck in the last war. It's so underwater, it's sunk. And I think in the end that Germany's still the most influential politically in Europe. And I think that will push the ECB not to hike anymore.
Good stuff.
Totally politically incorrect in that.
Well, I was going to say, Dick, you better be careful because we've got an Italian producer today. So if you suddenly disappear from this program, then we all know why. Arno, let's bring you in. Are you on board with Dick's point of view there that the ECB are going to reverse course pretty quickly, or do you think they could spend a decent amount of time at what we assume with 4% is going to be their terminal level?
I think, when we had our show at the end of July, both Richard and myself highlighted the fact that there is a little bit of commodities were starting to look good from a momentum perspective. So the risk that we have now, and by the way, we mentioned that before we had this massive breakout move in oil. So I'm not sure whether that gives us half a point each. We'll see. But in terms
I can't do half points, but you can have a little pat on the back. Go on.
Okay, I'll take it. In terms of where we are from a growth, whether they cut, whether they don't, look, I think it's clear that for them, the bigger focus right now is still inflation, which is why, going forward with another hike made a lot of sense, I think, going into last week. I also think that the hike was a pretty much a good midway point. It gave the Hawks something, that it gave them a hike, and it obviously gave the Doves a chance to signal that this might be the peak in terms of rates. But I do think that, yes, growth is an issue, but we'll touch on that in a second. Commodities, I think, is the first focus here. If commodities continue this push we've seen to the upside, even though we know they are going to be asleep at the wheel, eventually this move in commodities, if it persists, is going to make its way into headline inflation more meaningfully. And that's going to put them in a pretty awkward space to decide, okay, what do we do now? So I think the fact that they hiked, I think they could keep it here longer for what the markets anticipate if inflation, obviously, or commodity stays on this track. The other thing just to mention is that, growth is looking very bad right now. We've all seen it in the data, but at some stage we're going to hit a spot where a lot of the bad news would have been priced in. And if you take a look at the influence that China normally has on the Eurozone, I know things are looking pretty bleak in China, but based on some of the preliminary stuff they've done this month, I do think there's a higher probability that Q4 is going to look slightly better for China. And if Q4 looks slightly better for China, I think Q4 is going to look slightly better for the Eurozone as well. So if you combine a potentially slightly better growth outlook in Q4, and by better growth outlook, I don't mean that everything goes back to hunky-dory and it's massively positive growth. I mean, if you look at Germany's manufacturing PMI, we had 39.1. So just jumping to 40, or 45 or high 40s will already be a big improvement, even though it will still be bad by that sense. So I think as long as we have a Q4 that looks slightly better than expected, and as long as this commodity moves continues, I think they could potentially hold out for longer than expected. They could potentially see a higher for longer. I do think eventually all of them cut. That's just part of the cycle. It's going to happen. But I do think Q4 might throw a bit of a curveball for the markets, because it seems like we've reached that complacency level now where everything is bad in the Eurozone, everything is bad in China. So if we start seeing things look just slightly better, maybe that changes sentiment a bit, and I think that could feed into ECB policy as well, or at least just give them the cover to maintain rates higher for longer. So those will be the two key things that I think will dictate that. Firstly, what happens to commodities, and then Q4 growth, I think, is going to be a very interesting one for both ECB, for both the Eurozone as well as China.
Yeah, it's an interesting one, the China story. It does feel like we're getting near that kind of peak pessimism point. Trading Blows, it's the home of insightful information, such as Arno telling us that everyone is going to cut at some point. I mean, actionable trade ideas right there. Adam, I just want to come back to you very quickly. I mean, obviously talking about which central bank's likely to cut first, where do you see the risks there? Is it Europe? Is it Reserve Bank of Australia, for example? What are you thinking?
I think it's so hard to say, because I think it's going to be, a Q2, Q3 2024 story throughout this cycle. We've really struggled to kind of forecast meeting by meeting. As a guess for the majors, I'd maybe say RBNZ, maybe. They've the last hike was in May. From your calendar perspective, maybe. But at the end of the day, I think everyone's actually kind of facing the same problems at the moment. Inflation's too high, labor markets are too tight, and it's going to be, unless you're really in the weeds of that, I think it's going to be, and then marry that to the reaction function of a central bank. I think it's a tough one to call at the moment.
Absolutely. And we are not going to go and get into the weeds of that, because what we're going to do instead is talk about the Bank of England in the second round of the show. Right, the BoE, Dick, obviously your favourite subject in the world, and you must be, happy as a sandboy at the moment. Inflation's coming down. It looks like everything's under control. Bank of England Governor Andrew Bailey, as Adam said earlier on before we got the show going, looks like a genius. Surely all is fine and dandy once more, isn't it, going into the BoE tomorrow?
And Ryan Paisley's on a different continent. What better feel-good story could you have for the UK?
Well, that's the best part of the whole story, isn't it? And also, we'll check to see whether he actually watches this now.
That's very true.
Yes, well, I guess my blood pressure peaked at 1 minute to 7 this morning, and then sort of plateaued and fell, and I was waiting for the reasons behind this very good surprising figure that came out, which no doubt Hunt will take all the credit for, along with Sunak and Bailey. Interesting, some components in there. Travel, I read, was one of the components that pushed the prices down, but I guess that's package holidays not selling. I can't believe that petrols is included in the figures. Certainly, the pump prices have risen quite sharply and will continue to rise. But hey, credit where credit's due. It's absolutely fantastic, and nice to see that we are top of the charts when it comes to inflation in the world. I think the OECD predicting that we're going to be the highest one in the G7. So that's nice to see that.
Yeah, but when have the OECD ever been right about anything?
I don't get it. Got me a point, though.
Go on, you can have a point.
Thank you. What I think is actually interesting, as you know, I've been going on about this. I don't think inflation's peaked. I think that you're going to get more problems with soft commodity prices and oil coming through. partly weather related. You all laughed at me when I started talking about this earlier in the year, but I think agriculturals look very, very strong, and weather is certainly unpredictable. Then you've got the public sector. You could call them greedy, something or others, striking consistently, the doctors striking, pushing prices up. But being a pensioner, I'm very happy because I've got a triple lock, and that helps my triple lock go up. But I think there's still inflationary pressures there, which leads you neatly on to say, what's the Bank of England going to do this week? Who knows what those clowns will do? Personally, I think that they will go for a hike. I think it will be tight. I think it'll be 5-4, which I'm rather hoping the Arsenal Spurs score is going to be this weekend, with Saka getting 5 and Son getting 4, as he's in my fantasy football team. I think they'll go for a hike, and they will also, well, they are members of the Higher for Longer club, and it certainly is going to be higher for longer. The only thing that no one's talking about, and I just worry more and more about, is money supply and how quickly that's dropping, not only in the UK but worldwide. But we're going to keep high rates until we're in a deep, deep recession, and I think we could be 9 months away from that. But as I've said before, we're in a whole new economy. No one has ever seen a pandemic followed by a war and what that does to the economy. You know, we're all sitting here, we're all relaxed. You know, I'm working from home. I don't go to London anymore. That must, sort of affect, well, it certainly affects my expenditure. But I think these changes in the economy is so hard to read, and I'm not sure how much you can read into data that comes out.
Yeah, it is kind of padding around in the twilight, trying to work out what's going on in terms of making policy with the data. I mean, not only that, but also you think about things like survey response rates. They've just absolutely tumbled. So yeah, we're certainly not getting a clear picture. A 5-4 vote would be an interesting one. Adam and I were talking earlier, trying to work out what the vote split might be. Did you come to any sort of conclusion on where the risks lie on that one, Adam?
I think in the end, the core of the NPC, they tend to kind of vote as a pack, or a groupthink, as I'm sure you like to label it, Michael. So I think whichever way they go, I don't think it'll necessarily be a 5-4. I think they'll hike, and I think you may get something, instead of it being an 8-1 that we're necessarily we're looking for at the start of the week. I think maybe it could be something more 7-2-ish, 6-3-ish. But I think any calls on this are relatively low conviction ones, because at the end of the day, it's near enough kind of a coin flip now. And if anyone watching this is another conversation I was having with someone earlier, I was having to tell them off, is what you'll see on your macroeconomic calendars of expectations, for the Bank of England tomorrow. They're completely irrelevant now, because they're all based on survey data that was conducted last week. What you need to do is just completely disregard them, because the 64 out of 65 from Reuters, who thought it was going to be a hike, that's no longer the case. And you've been quite good at publishing some of the calls today as they've been coming in. Instead, we just need to stick to market pricing, and that's 50-50, which shows, which is kind of, it kind of shows the choreography of what we're looking out for tomorrow to that extent as well. So the immediate policy decision, you'll get a reaction, which isn't necessarily all the case, because sometimes it's baked in. Then the market will then go to the vote split, which again, that's another source of uncertainty. And then the third stage of the reaction will likely be what guidance, if any, we kind of get on further tightening, which, if you want my expectation is, I think they'll probably leave it as is. I don't think there's any kind of merit in kind of trying to declare that terminal's been reached. I think the Bank of England's been stung a few too many times. They might as well kind of keep the way that things are, and then they'll shift the conversation to what it is at the moment, whereby they're focusing more on not the peak of rates, but the duration, and we'll get some of those awful Hugh Pill kind of analogies of Table Mountain or whatever it is he's coming out with.
Yeah, I mean, he needs a better speechwriter, I think, at this point. That was just painful, those analogies.
A great link for you, though, isn't it, for Arno?
Well, it is. I was going to say, it does bring us very nicely on to Arno. What are you thinking in terms of the BoE tomorrow, Arno? And more importantly, where do you think sterling, the risks lie to the pound at this point?
Yeah, I mean, I think it's safe to say with CPI, the only thing CPI did today was change how sterling's reaction function is going to work directly out of the decision. But it's not going to change the medium-term view, I think, for the Bank of England. I mean, yes, currently we're trading, there's actually a slight skew towards a hold now at 53%, 47, but I mean, 50-50, like Adam said.
Oh,
so that means
there we go. Someone turned up with their terminal, didn't they?
I have to. I mean, it's open anyway. So I think that means the initial reaction from whether we hold or hike, that now creates some surprise, and obviously traders are going to get all excited about that. But the main focus, again, like both Adam and Dick mentioned, is what's going to happen to the forward guidance. And I think on the forward guidance, look, I think there's a higher likelihood after today's inflation that they could use this to signal that they are now at sufficiently restrictive levels. I know that they've been burnt a lot, like Adam said, but if we link up the recent communication we've had from Bailey, I mean, in their mind, they've already told us that they are moving away from that type of, autopilot in terms of hikes, and they would much rather, I think, if they hike tomorrow, would rather, like the ECB, like the Fed, leave it there now for longer, higher for longer, instead of just continuously hiking, because again, for them not calling it sufficiently restrictive obviously gives them optionality. But what will one more hike do anyway? If one more hike isn't really going to change anything, then just hike 50 basis points type of thing, or then don't do it at all. So I think that whether they hike or not, the main focus is going to be what they say about the terminal rate, whether they think they've reached sufficiently restrictive territory. I do think that's going to be the case. In terms of what this means for sterling, I think it's a very, very tricky one right now, because if they do say that they've reached terminal rate, that can obviously lead to some downside for sterling in the medium term, because a lot of upside we've seen before the recent push lower has been about rate differential. So if some of that starts to get priced out, that can obviously be a negative. In the very short term, though, and for the day traders out there looking at the event itself, I'm a little bit concerned about how much of a pause has actually already been priced into sterling at this stage. I mean, markets, I haven't found one participant that's told me that they don't think the ECB will have their last hike, if any, tomorrow. So everybody assumes that they are going to say or signal that they are done. So if that's the case and everybody's expecting it, how much of the recent downside we've had in sterling has already priced that in? And I think if the markets are expecting it and the pound has already depreciated, then that opens up a little bit of a short-term buy the rumor, sell the fact reaction in sterling. Because think about it this way, imagine they hike, we see a pop to the upside, they signal that they've reached terminal, we see sterling push lower, everybody's going to get sucked in at shorting sterling at the lows, and then sterling could just rip to the upside as those players that's been shorting it in anticipation of this announcement takes profit on those positions. So I think short-term traders needs to be very, very careful on what they do tomorrow. I think medium term, whether they hike or hold, as long as they signal that they've reached peak, that should be a negative sterling medium term. But I probably won't want to be short sterling tomorrow based on that announcement. I think there's a risk that you could get run over purely based on what's already priced in and expected right now.
No, I think that's a very good point. Go on, Ad.
I'll take the other side. I think sterling could have another good run next year, because I think the Bank of England could be the most explicit in their desires to keep rates higher for longer. I think they'll be one of the last to go. It's my prediction for 2024.
I agree with Adam, because it takes longer to feed through in this country than it does elsewhere, because of the number of fixed rate mortgages, which they want to roll off and make people who've got fixed rate mortgages feel some pain.
I can see the case for it, but I wouldn't mind cable to get a little bit close to 120 before I start to become bullish with a bit more conviction.
I didn't say buy cable.
No, I noticed that. Just one last thing on the BoE, very briefly. I'll throw it out to the floor. Any thoughts on quantitative tightening? Everyone expects they're going to quicken the pace, probably up to about 100 billion worth of gilts a year. Is that a concern, or is that just kind of ticking away in the background and we don't need to worry about it too much?
Well, part of it's because they're done with the 10 billion corporates, aren't they? So there's a mechanical extra 10 billion they need to make up for, and then it's just an incremental 10 billion thereafter. I think it's more. I don't think it's that much of a game changer, to be honest. But I think they'll probably be quite wary of political events next year, given the likelihood of elections. So it probably makes sense to try front run that as much as they can, is my guess.
Yeah, and of course, if everyone's expecting a US recession, if that spills over excuse me, if we'd have a recession in Europe and in the UK, you've got that old thing of, everyone wants to give themselves a bit of policy headroom, even if Ryan Paisy doesn't believe in that particular idea. Right. Well, that does bring us to the halfway point of the show. So let's get on to the third round. Right, sticking with central banks, can you tell us a busy week of central bank decisions this week? That rounds off after the BoE on Thursday with the Bank of Japan in the early hours of Friday morning. Arno, let's kick off with you. I mean, are you excited for the BoJ this time around after those hawkish comments we got from Ueda recently? Are we thinking there could be a few fireworks out of the meeting on Friday?
No, I don't think so at all. I mean, look, we had excitement for what was it, about 4 hours, 5 hours after those weekend comments, but the excitement flushed up pretty quickly. And the very next day on Tuesday was it the LDP, was it Seiko or Seiko coming out? You pushed back against the market's interpretation of Ueda's comments, and then obviously on Friday we had the BoJ themselves coming out, just trying to make it exactly clear to everybody, listen, you completely misinterpreted what we meant. We didn't mean that at all. We're just going to continue easy policy. So
I'm so glad you said this, by the way, Arno, because I was ready to bite big time with these comments.
I knew someone would.
Yeah, so I don't know. I can see that everybody's excited, about the BoJ because dollar yen is, where are we now? 148, 149. Yeah, I've lost count. It's just, look, when they eventually move, it's going to be a big deal. Is it going to be tomorrow or Friday? I don't think so. I think they've got no incentive at all to make any changes right now. Obviously, based on everything that's been baked in, if they do by some miracle, see a decent shift in rhetoric on Friday, that would create a fantastic opportunity for us to short yen pairs, right? But I wouldn't be waiting at my desk at that time on Friday, to see whether that happened. I would rather miss the move and just read about it afterwards. If again, right now, I think the most excitement we're going to get from the bank is probably going to be if we get some intervention again. And again, we've spoken about this a lot recently, is that you can't just be short yen pairs in the hope that they intervene, right? If you are lucky enough to be at your desk at the time when it happens, then try and take advantage of it. But apart from that, I don't know. I won't be getting up early to watch that. I don't think there's going to be any excitement for us there. The bank that I think, could give us more excitement, but that's another topic, is the SNB for tomorrow. I think that's one that traders needs to be a little bit more excited about. But again, you guys will be watching this after that's taken place. But bottom line is BoJ, I'm not holding my breath for anything. If you want to trade the yen, wait for intervention. I think eventually, if we don't necessarily need to see the BoJ tightening policy to see some convergence in terms of rate differentials, right? If the Fed and the BoE and the ECB, if they do eventually follow through with cutting rates eventually, that is going to create some convergence, and maybe that going into next year could create some upside potential for the Japanese yen. But you're not going to trade that now, right? You're not going to buy the yen now in anticipation of that happening. When you start getting noises and signals from banks that they're starting to move away from higher for longer, that's going to get attractive for the yen. But I think we are at least a couple of quarters away from that. So I'm not touching the yen right now. No excitement, I think, there for Friday.
I mean, that could age terribly, Arno, but I'm on your side. I think it is going to be a bit of a sort of watching paint dry.
If it ages badly, I will take that on the chin any day, because you know what, BoJ, it's probability is skewed towards a nothing burger.
Absolutely. I want to go to the hooded man, Mr. Matthews, for a second. Arno raised a good point there. The BoJ are seemingly dragging this on and on and on. As we get to a point where people are starting to expect cuts in the second half of the year from the Fed, ECB, BoE, etc., do you think the window for them to actually do anything is starting to get quite closed at this point? Or do you think the BoJ don't really care too much about external developments and are just going to take things at their own pace?
All right. Well, two things. I think that any cuts are going to be pretty minimal for a start. And I think that instead of high for longer, we should be talking about high for a long time. I think we're in a new era of high interest rates, or back to an era of proper interest rates
during the war.
So I think we should consider that. That may be a controversial thought. I don't think Japan particularly cares what anyone else thinks, and they will move at their own pace in their own way. I thought it was interesting what they've done. I think that was probably a subtle attempt to try and intervene in the FX markets, so subtle that most people missed it, and it didn't work. I'm not sure that they're concerned what the rest of the world thinks. They'll do what they want to do when they do it, and in a way, as they creep towards normality in interest rates, it's going to put more pressure on the US, and it's going to put pressure on US yields, I think, because it will suck money out of the bond market. So I think we've got to be very patient. I agree with the guys. I don't think you're going to see anything on Friday. I'd be amazed if you do. I just think we've got to wait and see, and they will surprise us when they feel like doing so.
Indeed. But, we're not going to get up early to wait for that surprise, naturally. Adam, when the surprise comes, or if the surprise comes, what are the hints? What are the risks? What's the pathway that the BoJ will take to eventually tightening things up? Because it seems very much sort of one step forward, two steps back at the minute.
Yeah, I mean, look, I think going back to the comment you mentioned the other day, I think, my kind of gripe with it at the time was, if you actually look at the quote, it is not impossible that we will have enough information and data by the end of the year. It is not impossible. Well, that's just basically saying something which has a non-0% probability could happen. So I didn't buy that as like a kind of hawkish remark at face value anyway. I think in terms of the BoJ, I've said this for quite a while. The problem they have is, at the moment, their kind of policy needs to bend to that of the market if they want to control the currency. So dollar yen has been pretty much one-way traffic in recent months, and it's moving ever closer to 150 for dollar yen. Verbal intervention isn't going to stop the rot. And physical intervention, if it does, you might see a bit of whippy price action one day, but the market, at the end of the day, it wants to see an actual policy shift from the BoJ. That's the only thing that can appease the market. And I agree completely with Arno. I don't think that's not going to happen this week. I really don't think it's going to happen at all. At earliest, we might see a little bit of firming language around the October meeting, because that has a forecasting round. But even then, it still might be premature, because from a political standpoint, it's not going to be a popular move for the BoJ, because Kishida wants an election this year, and he's going to want to be signaling tied to monetary policy in kind of Q4 this year. So, and I think the path for the BoJ is a trickier one. I've always, I've said this on quite a few shows, the linearity of people's expectations for the BoJ is kind of unrealistic. They might have to tweak yield curve control one more time, or formalize what they've already done. They don't have to abandon yield curve control and then leave it a period of time, and then they'll start hiking rates. So that's quite a lot to go right for the BoJ. And, as we've kind of made the point, they're doing that at a time where the rest of the world will either be well at terminal or even cutting rates. So basically, you're kind of, the people's expectations, the BoJ are going to be the relative hawkish outlier to the rest of the world at some point next year. And from experience, I find that hard, based on what I know, to kind of go along with that. So, I think ultimately the thing that will forecast the BoJ, if they are to move, is not necessarily the actual economics surrounding it.
Yeah, that's a very good point. I mean, trying to prop up the value of a currency when you have by far and away the lowest, not only overnight rate, but yields across the G10 world, it's just not going to work. You're just going to burn through your reserves if you did try and do that. So it's going to be interesting to see how that one develops. We're going to dig into the FX market a little bit more in the last round. Right, Dick, we'll start with you, see if you can catch the other two up at this point. What do you think's going on with the dollar? We've had, 9 straight weeks of gains now? I mean, I'm being a little bit uncharitable, perhaps, asking you this right before the Fed meeting, but the euro is on a record weekly losing run. Cable, as we mentioned earlier, is languishing down in the low 123s. Do you think the dollar can continue its bull run, or are we getting towards a point where we might be saying that actually things have got a little bit too far and could be due to reverse?
You're talking my language when I hear the euro languishing and the pound at the bottom. It's music to my ears.
Smiling like a Cheshire cat.
I always love the dollar, as you said. Buy dollars, wear diamonds. Although you don't want to do that in central London these days, or Mr. Khan.
You're about the third person to make that joke now.
I know. It still amuses me, though. Although I did, yes, we won't talk about that. Well, there's an old expression: bottom picking is an unpleasant business, and thankfully Ryan's not here to demonstrate.
Oh, God.
And I think there's enough people who've called foul on the dollar over the last 6 weeks or so. Oh, that's the top. I still like the dollar. I think the economy is amazingly resilient. Employment's still strong there, although I know jolts are starting to concern a little bit. I'm going to put my head on the line. 4 or 5 hours ahead of the Fed meeting. I still think they'll hike. I think that will give another impetus to the dollar. I think the states or the Fed will be the last of the major central banks to cut. And I don't see them doing it probably until this time next year. And why should they? Employment's so comfortable. I don't think they'll get wide until you see unemployment up at something like 4.5%, something like that. It's defying tightening. Financial conditions are still easy over there. And what interests me, and I mentioned it on Twitter last night to you, how are bond yields still rising like that and the S&P is still bubbling away? It's just incredible. And if you look at the 10-year bond, I just think that's indicating that we're nowhere near terminal rates yet. I think you could still see another 0.5% on by the Fed over the next few months. Inflation, I think, is going to bounce back. They still want to refill the strategic petroleum reserve. So I think there's lots of reasons for interest rates to stay high, and that will be the driver for the dollar. Plus, you've got geopolitical problems. I don't think Ukraine's anything like over. You've got problems in Azerbaijan and Armenia. Try saying that after lunch. It is only Ribena I'm drinking, I will say. So I think you've got those problems. The only thing the only worry on the horizon I see for the dollar, and I got slapped down when I said it to Blake Morrow, was it last week? I think Biden is an absolute basket case, and I wouldn't be at all surprised if he was carried out and replaced by Harris.
Oh, God.
I'm being serious. I mean, if you listen to the guy, how can he be the leader of the free world? It's just absolutely extraordinary. And I think that is, to me, it's a genuine worry. And that is the only reason I could see for not being long in dollars is that he gets carried out. I've no idea what the bloody Elliott waves, whether it's overbought or whatever. I just think fundamentally it still looks really, really good.
Well, surely Elliott waves aren't predicting the demise of Joe Biden, are they? I mean,
he could do with a few Elliott waves, actually. Wake him up.
Normally, when I see that Ryan isn't on the show, I think, I can relax. I don't need to control the 3-year-old child who joins us. But yeah, maybe that's not the case.
That's a bit harsh at 3 years old. There's someone described, I was on a video call with 40 of my colleagues. I looked like the university lecturer with his class, which I thought was a bit harsh, and they're making me feel young.
Well, you've got your hoodie now, so you can be young in spirit.
I'll have to get a copy of The Guardian and put under my arm and get some leather patches on my elbows.
He's on fire now.
I'll shut up now. I put myself on silent.
What are your thoughts on the FX space? What are the risks that people should have on the horizon that could perhaps derail this bull run that we've got in the dollar at the minute?
I mean, the way I kind of frame it is the reason why the dollar's had such a good run of late is its relative growth prospects relative to the rest of the world. So if you kind of want to see a turnaround in the dollar, then you kind of need to see US growth slow down in isolation, because if it's more synchronized global growth downturn, then you'd assume the dollar would benefit from its safe haven status. And, ultimately there's a few things bubbling in the background. You got student loan repayments, you got the auto strikes, you got dwindling savings from the pandemic, and dare I say shutdown fears, but we'll gloss over that one.
That might be a point off.
No. Okay, all right.
But is that shutdown fears because of Biden?
Possibly.
I'll agree with that one.
But ultimately, you kind of want to see an isolated US slowdown. But the one thing that's kind of been this week and last has been the spike higher in crude prices. And if anyone's to benefit from that, it'll be the US. They're a net exporter. A lot of the other major currencies which comprise the dollar index are net importers. And I think, from a policy perspective, I'll touch on the euro in a second, but the Fed, by the time we close business on Friday, we'll have a position where there's a chance the Fed will keep their 2023 rate hike on the table, and they may remove a cut from 2024. So therefore, you've got to see where's this relative strength going to come out from elsewhere to kind of derail the dollar. Is it going to come from the euro? Well, we've touched on this. Growth's really faltering in the euro. It doesn't really look like that's going to turn around anytime soon. And as Arno mentioned earlier, the only thing that can potentially save it would be China. We saw China kind of act as a headwind for the euro. So logically, you'd say if things were to bottom out in China, it could be euro supportive. But, is that really going to be enough to engineer a rally in euro dollar when, we've said in this conversation already, we think the ECB's done. And my personal prediction is I think we'll get, by the end of the year, we'll probably see ECB rate cut expectations brought forward from, I think it's like July or September at the moment. I think that'll get brought forward. And then, other majors, I've made my views clear on the Japanese yen, overreaction to UAIDA. I think the Japanese authorities aren't going to be able to stop the rot without a BoJ policy pivot. And like I mentioned, I don't think the BoJ is going to position itself as a hawkish outlier anytime soon. And, if you touch on things we've already touched on, I think for the pound, I think short term, probably dollar outmuscles it, but maybe in 2024, if my prediction, the Bank of England being the last to cut comes to fruition, we could see a little bit of a pattern that we saw kind of in the first half of this year, where cable has a decent run. But I think all signs at the moment in a short-term perspective are kind of point towards a firmer dollar in my mind.
I would definitely agree with that, and I think you put that very, very well, despite you mentioning the government shutdown, which we must not.
Forgive me for my sins.
You redeemed yourself with the quality of the rest of your answer, mate. I'm happy to say. So Dick's a dollar bull. Adam is pretty optimistic on the greenback. I am as well. Arno, are you going to make it a full house, mate? It's nothing like having a view with conviction and just being ready to go straight away.
Look, medium term, I agree with everything that the guys said. I was going to do a full expose on, a potential government shutdown, but I'm not going to go there right now. That's a joke, by the way. No, look, I think medium term, it's all about US exceptionalism. We've seen that in the data. It's been very solid. That's why yields are back to cycle highs. That's been supportive for the dollar. I mean, when everything else is in the dumpster, it's not difficult for the dollar to rally. And then you have the data that's just been so exceptionally good. That's been a key driver. Even though I think that can continue from a trader's perspective, what I don't like about the dollar right now is that it has gone a little bit far, a little bit too quickly. The markets from a positioning perspective looks a little bit heavy as well. So I don't like chasing it higher here. I would prefer to look for short-term opportunities to trade it lower if we got some pretty significantly bad data. Also, like Adam mentioned and like we mentioned earlier, I think something to watch is Q4 is going to be interesting, because if China does see a bit of a bounce, a bit of a pop, and if you just look at the recent data, it's not going to take much to see a bit of improvement taking place in that data, right? It's been so bad. Even if we just see a little bit of mean reversion, I do think if China does better, that could see a little bit of that exceptionalism trade fading again in the short term. But again, that's only going into quarter four. So the way that I've been trading this personally is I've been looking for short-term opportunities lower, purely based on very, very bad economic data. But I'm talking about, scalp trades here. I'm not talking about medium-term trades, really just, day trading this in the short term. That's been the way that I've preferred to trade it. If we see a bigger a decent pullback, it's something to consider. But again, the closer we get to quarter four, I would get a little bit cautious on, where China will be going, where Europe will be going as a result of that. So right now, medium term, yes, dollar bullish, but I am a short-term bear, actually looking for opportunities if the data is bad enough.
Well, you haven't got very long on that one, Arno, because Q4 is 10 days away. So
That's good news.
You better hurry up. Good stuff. In any case, that does bring us to the end of another show. So let's have a look at the final scores. Well, Dick, quite clearly your hoodie did not prove to be a little bit of a lucky charm. And what's that? 4th, 5th, 6th wooden spoon, something like that now?
Think so.
In any case, congratulations to Adam for coming home with the victory once again, the odds-on favourite, as per usual. Well done, mate.
Thank you. That's all I have to say.
You're most welcome. It must have been all that research I sent you this morning. I'm sure payback in the form of a beer will come shortly. Right, let's wrap up the show there. Thank you very much to the gents for joining me. Dick Matthews from 1.io, Adam Linton from Newsquawk, and Arno Venter from down in South Africa. Thank you also to our producer, Ricardo. Clearly, Kyriakos doesn't like us anymore, so we've brought in a younger, better model to replace him for bringing together the show so brilliantly. If you've enjoyed the video, drop a like, leave a comment as well. Let us know how you're trading the markets and your thoughts on Arno's new hairstyle. And we will be back with another show very shortly. Thanks for watching and goodbye for now.